Good morning to all of you, and again, thank you very much for coming here on a Saturday. We hope by the end of the day you'll have learned a lot, heard a lot about what's happening in the world and also what's happening in India and the companies and the markets around us. Equitymaster and Quantum Long-Term Equity Fund and the Quantum Mutual Fund products are really geared towards helping investors as opposed to helping the intermediaries or helping the providers of the service. The focus of Equitymaster, of Personal FN, and Quantum Mutual Fund products is what's good for you is what we will do, as opposed to what's great for our bottom line is what we will do. That's the overall thrust of the companies that I'm involved with. If you look at what's happened in the world, and I think it's very important to look at this because India is certainly integrating itself with the world. So what's happening around us has a lot more impact to what will happen here than in the past. So basically the one number to remember from this is that this is current account balance. Current account balance is, from a country's perspective, how much money is coming in or going out. Red minus means money is going out, and i.e. the country is spending more than it can afford in some sense, and it's borrowing money, much like a household would. If you spend beyond your means, you've got to either borrow from a bank and create a mortgage to buy a house or a loan from a family member. And this graph again says it. Asia generally is the one that's saving. These are current account surpluses, balances, as a percentage of each country or region's gross domestic product. How much is the country saving compared to its total wealth or its total annual income, if you will. The new savers are basically four blocks. Japan has been a saver, and Germany has been a saver with the rest of Europe. The newly rich Asian economies, if you will, that's India, China and all, have also become big savers, and developing Asia again has become savers. We worry about the budget a lot, but the impact of the budget has been less and less on India, in the sense that in the early 90s and even the late 90s, what the finance minister did on budget day was a big impact for the rest of the year, the rest of life of many companies. And many industrial families prided themselves on their connections in New Delhi to influence and write government policy and announce breaks on budget day, which would then give them a huge bunch of rewards and great stock market pricing for the next 12 months. Summary: India has enjoyed the benefits of global cheap money. India will face a much harsher global rate environment in terms of the cost of money. The global solution to US funding needs will have some impact on India, but what happens to the dollar because of our de-linking in terms of the global economy will not have a big impact on India. We have enough of our own problems that will have more of an impact on us than what we worry about US and what they are doing in their economy. However, the fact that we are linked to global capital flows will have an impact on the cost of money in India and the level of stock market prices and level of real estate in India. The Indian economy, again, as I said, will be driven more by domestic demand, a lot less by what's happening around the world. 300 million poor people, in our view, is a big problem, and we need to find jobs for them over the next couple of decades or else. So with the challenges of population, poverty, unemployment, bureaucracy that's pretty much a nightmare, politics that's a disaster, in our view, deficits will continue to be in India and they'll increase, which will have inflationary pressures. So you can either raise interest rates a bit, which they will, and the currency will become minus and take the brunt of that.